Last night, the US Federal Reserve's FOMC raised rates by 25 basis points as expected. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Last night the Federal Reserve raised rates by 25 basis points as expected. We also saw the quarterly summary of economic projections from the FOMC, where each individual member gave their forecasts for GDP, unemployment, the Fed funds rate and inflation going forward for this year and beyond. Now what we take away from that, looking at the dot plot in particular, is that the FOMC reckons they'll raise rates by another 25 basis points sometime this year. Bear in mind they're now standing at an upper range of 5%. The last time they were this high was back in 2007. The interesting thing about that, just before the banking crisis which led to the great financial crisis. What are we seeing this time round? We're seeing failed banks. Nasty parallels perhaps. Well, it is quite interesting because what's also going on there, not only is the Fed raising rates, although now we can see that the terminal rate is going to be just over 5% rather than the 6% that was being mooted and suggested a few months ago, but it's also doing quantitative tightening. It's actually reducing its balance sheet at a rate of $95 billion per month. So in other words, financial conditions are tightening, but it's mindful of problems in the banking sector, and it is adding in liquidity to do that, to actually help the banking sector get over its problems. Now, last night, the market was doing very nicely after it got the 25 basis point rate hike, and as Fed Chair Jerome Powell was delivering his press conference, all going very smoothly. But then US Treasury Secretary Janet Yellen, a former Fed head herself, really threw a bucket of cold water on the whole market, because she said that there was going to be no blanket guarantee for banks' deposits. At the moment, that guarantee stands at $250,000. So why should there be a guarantee? All you're doing is bailing out very rich people. But nevertheless, the market didn't like it, even though the Federal Reserve, just like the ECB and just like the Bank of England, although they're raising rates, at the same time, they are supporting the banking industry. I hope you found this helpful. If you have, please like and follow. And as always, thank you very much for watching and best of luck with your trading. Goodbye.